I'm going to show you half a dozen ideas of stocks that I think have some promise. If you take a look at IBRX, which is a really intriguing little junior biotech, here's a stock that popped all the way up to 10 last April, and over a period of 5 months, drifted all the way back down to the $3 range. Well, you can see what happened this week. Spike, blowout, pullback, retest on low volume, which is a very good sign. And the spike got right to the prior high back in June, so we have a double top. My theory is that the stock's going to back and fill for maybe a few more days and then make another run. If it does, the first thing you want to do, you want to see about today's low at 550 as support. It closed at 560, so it's not that far from support. Secondary support is 470. This is a very volatile little junior biotech stock. Okay, so there's support number 1 and 2. Resistance is up here, and if you see any kind of spike, first of all, above 682, I would look for 740 very quickly, and then run into the 9, 10, 10.5 zone. That's one of my junior biotech ideas. This one I really like, and I've accumulated a big position. This is not a small company, by the way, folks. They did 21 million for the quarter. They're going to do over 100 million this year, 200 million next year. It's a dynamite company that's going to change the technology and the electrical outlet industry. It's really phenomenal stuff. If you go to their site and look at their videos, you'll be amazed like I was. Anyway, but here's the bottom line. It was in a long-term downtrend. They changed management. They brought some people in. On the board of directors is the CEO, ex-CEO of Home Depot. They have some strong product lines that really will blow you away. But more importantly, technically, and I'm a technical analyst. Explosive move happened recently. A move from 80 cents to about $1.40, and then a pullback, a nice little flag in here. That broke out recently. Today, a little pullback, which I use to accumulate stock. I firmly believe we're looking at 2 3/4, and then 4 in the next few weeks and months ahead. So I think it's a double, maybe a triple near term, but this is a technical breakout of a really neat little company. I have kind of interesting that the option professor looked at LAC as something I put a swing on. When it broke out here and pulled back, I put a swing on it. It popped. It's kind of vertically, just about from 289 to 520, nearly just about doubling in a week. Usually when that's too far too fast for me, I'll look for a setup, and that's what I'm looking for here. Any kind of consolidation that sets this up in the next week or so, I have targets at 5 3/4 and 6.5. Beyond that, probably closer to 8 1/4. So those are my targets. The 6.5 gives you a gap fill. There's a gap back in here in April. I'm not a big believer in gap fills, but we get them a lot. The momentum could take it right there first and then pull it back. So it's something to keep your eye on, LAC. In that same group as PLL, which I really like this company, to me, Piedmont Palladium was a leader in the industry for a long time. Take a look at this run it had where it went from $4 or $5 all the way into the 80s. It almost hit 90, folks, 88, 97. And then over the last couple, 3, 4 years, it drifted lower. This is a clear breakout on volume, a nice pullback retest. The new trend line is started. I put my people into this at around the 10 1/4 range when it backed off, and maybe it was 10.5, but then next day it spiked up to 12 1/4, and today reached over 14 for the first time in about 2 weeks. I believe it's going to test and take out 15.5. My targets are 17.5 and low 20s, and that's only wave 1 and 2. Wave 3 should get you there, and then we have longer term targets up in the mid-high 20s, maybe even 30 or better, because this, again, a lot of room to go back up again of a stock that was 88. It came all the way down to 6. And believe it or not, as you know, there's a lot of stocks that did that over the course of the last few years, but they are certainly recovering. GRRR, interesting low price stock called Gorilla Technology. They're a software company. I'm a big believer technically in stocks that break out from long-term downtrends. This is a reverse split stock. That's another thing that's hot in Wall Street these days, reverse split stocks, because they reverse 5, 10, 20 to 1 reversal and squeeze the capitalization to a very small amount. The stock can be easily manipulated in the short squeeze. But in this case, what I see here, breakout, little wedge, pop, and a coil. Then another breakout and retest, a new trend line, new channel has been created. In my opinion, with a stop on a 3 3/4, you have a target now 5.75, 6.75, and as much as 8 in the next few weeks and months. If this thing continues to trend like it has with good underlying technicals, I believe that could be the case. But always play your stops when you can. This is where I stop it. Certainly under 3.75. You don't want it below that under any circumstances. A couple more, and well, NXL is something I'm all over recently. This is a stock, obviously, it has a big swings. But this time, I think we're going to blow through the highs and run into the 6-7 range. You can see it's beautiful big reversal day. Now check this out: 31 million shares from 113 to 256, more than doubling in a day. And then a 2-day lower volume pullback before today's action jumped it back up again. You can see there was a little bit of a swan dive there, but it came right back. One thing about this stock, it's got real energy and power to it. And I think we're going to see this one hold this line around the $2 range and take a run at 4. So I'm looking for a 50% run on this one as well. Just a couple more. We're done with this. AMLX is a neat little biotech that has had a beautiful rounding bottom type pattern. Broke out there. We put a swing on it. It's now setting up for more upside. Again, look, everything's vulnerable in a market like this. If the market should turn down, obviously you want to keep stops in place. This one for me, I'm stopping on at 440. I have a 65-cent risk on it. The upside could be 6, 7, and 8 or more. I wouldn't be shocked to see the stock make a run into the mid-teens. That's a triple from here. It's one of those biotechs that can do that. So, folks, I just want to let you know a little bit about the my firm, TimingResearch.com. And check out my website for you just a minute. Okay. David, can you see this? My website?
No, I'm still seeing your charts.
You are? Okay. Hang on a second. I have to share my screen, I guess. Well, that's going to be, I can't get to that. Oh, there it is. Okay. It's a new share. Okay. So you can see my site now, I assume?
Yes.
Okay. So folks, that's me, and that's my website. I've been a technical analyst for over 50 years. I wrote a book called Profitable Day in Swing Trading, written in layman's terms for anyone who wants to do simple trading bar charts in 1 and 5 minute, 15-minute time frames. I believe the market itself, like you saw the charts I was showing you, is technical, and human emotions are involved in that. If you read Technical Analysis of Stock Trends by Edwards and McGee, which is the Bible of technical analysis, you'll learn a lot about technical patterns. I'm a big believer in pattern recognition. I think stocks repeat those patterns over and over, and you have to discern which ones are the bullish ones, which are the bearish ones, obviously. That's one of the reasons why people come to my site. And I just really believe you need to stop chasing stocks and access my site for the ultimate stock market technical analysis service for day and swing traders. Simply go to start a free trial. And today we're offering something. You see where it says, how did you hear of us? There should be somewhere there that says that.
I think we talked about that last time. That's not there.
Right, no, I understand. So when you says, hello, have you been day trading? That's weird, Dave. I think when you go to register, that's when it says, if you click on register, it should be something, because I was told by my people today that maybe not. But I need you to, anyone who wants to, this is normally a 10-day free trial. Today we're offering 20 days, so we're doubling the free trial. No credit card necessary. Just go to my site, sign up, and make a note somewhere with the phrase "analyze my trade," and then you'll be able to get your free trial. Okay, back to the charts, and folks, we only have another 19 minutes, and I want to get to as many people as I can. So what I'd like to see is anybody with a question about any stocks, throw the symbol out at me. There's, let's see, I think there's a couple of people already. There are, hang on. Paul wants to know, is there any upside? What is the upside in GLW? Well, GLW and the reason that symbol is GLW It used to be called Corning Glassworks, and they just changed their name to Corning Inc. And you can see that when a stock does this is a daily chart. Let's drill down to an hourly. You can see that from this low of 36.70 to the recent high has been about 4 months, and that high is in the low 50s. They had a good earnings report. The stock popped and then formed the coil. Now, usually that coil is an indicator of a bullish indicator, but when it drifts down and takes out the pullback low, it's a negative breakdown. And for me, I can't be clear whether there's some more upside on it. I will say this: it's had a 1, 2, 3, 4, 5 wave Elliott wave type move since November. This is, in other words, in the last year, it's had a major 5-wave move. Can it go higher? Well, technically, yeah. If it continues the momentum here, you're looking at high 50s. But if you see something in the 57, 59 zone, that would be a sell for me. And the reason I gave you that is when you look at drawing your charts on, I'm very precise in the way I draw my stuff. If you're looking at a long-term chart pattern on GLW, there's a 1, 2, 3, 4, a wedge formed in wave 4 here. The wedge broke out, a flag formed, another flag formed, then it spiked up. Again, Paul, my answer is, yeah, I think there's more upside, but I would implore you to keep a stop under here. Under 45.5, 46 is where I'd stop it. So keep a 2 to 3 point tight stop, especially in this volatile market. So folks, if you have any symbols you want me to look at, go ahead and then post it. I'll be glad to assist you. PayPal. Sam wants to know about PayPal. PYPL. Well, here's my chart angle. First of all, today was a lousy day. I think was it after hours that they had that earnings report? No, that was, looks like it happened. So I'm not sure what that report was or why that stock took a dive. Had to be earnings for that to go down 10 points. Anyway, right now, again, if you look at the way this acted, you had multiple waves up, 5 waves, long-term chart pattern. Today's action broke everything. It broke the trend line, price support, 2 price supports, and a 50-day moving average. On top of everything, it managed to bounce back and close right at resistance. Often when we see a stock break down, they'll snap back. It's called the kiss back and then die. So what you want to do, Sam, is keep really close tabs on this one, very close tabs. And if you see, first of all, what I would do is stop under here, around 76. There's also a 50-day moving average at 76.08. So no, you have no choice. Stop under 76. If it continues as an ascent, if that's just a one-day wonder, folks, the one thing about charting is, for me, one day does not a trend make unless there's a downside follow through. But when a stock has multiple waves up and Elliott wave sense, and it's gone from 58 to 85 in 3 months, and then it gets slam dunked like this, it's usually a trend change beginning. Not always, but that's why you put a stop right underneath that first support level. So that's that. And GIB is another symbol that I was given here by Sam. That's CGI Group. Much better chart. There's your trend line. See, Sam, it's easy to draw your lines and see where resistance, support is, etc. And you can see that over the last 6-8 weeks, it has been unable to get to 116.25 roughly. So when a stock does that, it struggles for a month or two. This is going to have to break to the upside. Again, if I want to protect your position, the stop is under 111. Don't give it any more room than that. If it breaks 111, it's got a lot of room to drop. And my target would then be down in the 101 range and then 95, 96. Long-term chart, pretty darn strong, but I also want to point out that something that's been a multi-year trend, once that trend breaks, take a look how beautiful long-term chart that is. So we don't want to see this thing break and run down to the trend line, because that would be a drop of at least 11 or 12 points. If you're a long-term investor, the key for that, and you've been in a long time, you have big built-in profits, that's where you stop it, under 97. So what I would do is stop. I would always recommend stop half your position there, half on the next support level. On the upside, if it does make the move, 127 is your target. You're welcome. Barry wants to know about UPRO. This is the Ultra Pro S&P 500. Yeah, one thing about this thing is that if the S&P, and I do agree with the option professor, there's a lot to worry about with this market. When you've been in uptrend for as long as we have. But I can tell you that my buddy Avi Gilbert, who's an old friend of mine that used to be a subscriber of mine, now has his own site because I forced him to. He's that good. He is still amazed at how the market is hiding its intention. The market is good at hiding its intention. And remember this, the market never accommodates the majority. It never does. And when everyone is too bearish, and a lot of people are getting bearish on us here. Now, it's one thing to think bearish, it's another to act bearish. So right now, the action isn't as bearish, the thinking is. So we'll see what happens when the market turns down if everybody runs for the hills, the dams are busting. Okay, so back to Barry's question on UPRO. This is a beautiful V bottom with a right hand extension and a breakout through the neckline. Platform and a flag. To me, it's a 1-2, and this is a 1-2-3-4. I'm expecting a fifth of a third and a run to about 94. Once that occurs, a deeper retrace. But ultimately, on a longer term basis, this could be $105, $10 stock. More like 105. Well, of course, that's it. And predicating that the S&P does make a higher move. And I don't think 6,000 is out of the question, but we'll see. My personal target is 59.50 to 59.90. I don't think it makes 6,000, but maybe I'm wrong. BWXT, there's a question from Bill Voles. Hey, Bill. BWXT, nice chart, my kind of stock. I like growth stocks. I like growth charts. This is one. I will tell you something, Bill. It's long in the tooth, as you know. Any stock has gone from 43 and change to 120, 130, tripled. And it's near the top of the channel, and it's at an all-time high. Can always move higher. Remember Jesse Livermore, folks? For those who don't remember, he was one of the youngest, sharpest traders during the 29 crash. And he said, buy high and sell higher. What that means is buy a stock that's in an uptrend, making new all-time highs, and buy it after it breaks out. Why? Because there's no overhead resistance. There's no people trying to get out even. There's no people who bought the stock and stuck with it and happy to get even on it. It amazes me how many people trade to get even, but there you go. So BWXT is at the top of the long-term channel. This is way extended, way extended. Yeah, well, the bottom line is, again, Bill, I saw your note. It's complete fundamentals. I ignore fundamentals. Not that I don't ignore fundamentals on my day trades because I want to know why stocks are moving. But from the standpoint of the overall pattern, the chart will tell you what to do. It'll tell you when something's turning negatively. It'll break down before any news is out. When the news comes out, it's probably time to buy it, not sell it. You buy the rumor, sell the news. That's the old adage, and it works amazingly. So in my mind, you sell half your stock here and put a stop under one. Let's see. Stop under 108, 107, 108. It gets below that, it's going to turn pretty negative. So Pat says HL, which is Hecla Mining and Gold and Silver Mining. I like this whole group. And check out this chart. I want to point out something if you may not be aware of it. This is a massive left shoulder, head, right shoulder. Get this, folks, 11 years in the making, 11-year inverse head and shoulder. You know how powerful that could be? If gold and silver do what I think it can, I think this is a minimum of double from here. Now, there's resistance going back, 17, 18 years in the 12, 13 range is where I'd expect it to go to. Once you get to that, then you're looking at high teens, low 20s. Let's do a measured move. I think it really works in charting. This stock moved from a low of 132 to a year later in 21 to 944. Let's just say it went up 8 points. Let's add 8 points until the pullback low, which is 333, and you got 1133. Now 1133 comes in right about there, which is not far. If you bought the stock at 7 and it's up to 1133, you're a happy camper. You got about a 60% profit. But in a long-term basis, I think gold and silver are going to have a generational move. I know my buddy Avi thinks so. And I'm going to tell you right now that long-term base like that could support a big move, even beyond 12 and change into the high teens or more. So it could be a double or a triple even down the road. I like it a lot. Does anybody else have a question on any symbol whatsoever? Well, no questions. Well, that's okay. I know that you guys are tired. I'm the last presenter. So let me go over some other symbols for you. Today, we have DVA, good. DaVita, another stock that got crushed today. Looks like after hours earnings came out. Oh, yeah. So this stock closed at 158 and it got slam dunked over down to 130, 28 points, and then bounced back. This is a V bottom with a right hand extension coil. It has to break out because if it breaks down, kiss this goodbye. Now, I would say, I'm assuming that you're looking at a very short-term basis. I can't tell. The other thing, quote, folks, always give me a symbol, but also tell me if it's short or long-term or a day trade or whatever you want to do with it. If I'm a day trader, I'm watching this carefully because tomorrow you may retest 157.8. That would be a massive recovery. But if it doesn't get over 151.5, careful. I would have to stop this somewhere around 144. Under 144, it could just fall apart again. Once the stock breaks and does a kiss back, note this low and this low going back to May. That's where it hit today, and then it bounced. So is it a great company? It sure is. There are kidney dialysis centers. 1, 2, 3, 4, 5 waves, though, Elliott wave move. And there's a lot of stocks that are going to start to do this. If that happens, the whole market's going to cave. I would not be shocked to see that. I would look at ultra shorts and look at protection, folks. We got some more symbols, so let's move on. FCX is a swing trade of mine, but I'm not so sure. When it broke out here above the moving average, is when I put a swing on it. It exploded from 44 to 52 and change, about 8 points, did it in a week, got right to a key zone of resistance and backed off. Now it's an orderly retrace, and it's right back to support where it broke out from, filling the gap at the 50. So massive support at 40, looks like right where it is, right about 46.5. If this breaks here, there's something wrong. Copper prices, I think, came down today, but I'd have to stop it under 46, 46.25. The risk is 43, and then a retest of the double bottom at 39. If it holds it here and moves back up and takes out, I would have to say 49. That's where I think you're going to see 52, 55, and 60 on an intermediate to longer term basis, but kind of risky right here. You got to be careful. Flex, interesting you say that. This is a tech trader swing. Now, today was a bad day for it, but when you see a long-term chart like that, outstanding, right? It broke out. We put a swing on it, then pulled back and popped, but it's unable to break out. A bad day today. You see this last pullback low? When a stock starts to do this, you don't want it making a lower low. 34.53, stop under 34, 34.25, right there. The vulnerability is 32.75, 31.25, and all the way down here to 28.5, which could easily happen if the market goes into a funk. The trend line is showing a pullback to 29.30 is very doable, so be careful with this one. What we're looking for it's for it to take out 35.85. Today's high was 35.82. Interesting. So there's a double top there. If you take that out, and this is a 1, 2, 3, 4 wave 4 consolidation, the fifth wave target is 38.5, 39. The channel top is 40.5, 41. So somewhere in that range is my target if it doesn't break down. CCJ is another one I like. This is the largest purveyor of uranium. They lead the industry, Kimiko. Look at this long-term chart. It's a beauty, but hard drop to support, double bottom, hold the trend line, and then breakaway gap. This is where I said the stock is moving higher. The breakout above 45, and it went to 58 and change. A nominal new high was actually made before the pullback. This is also on support. Is it dangerous? Sure is. In other words, if it breaks here, I would stop under 53. Do not let this thing roll over, because your next stop is 47, maybe even down at 41 in that area. If the market continues higher, this one has a shot, I think, of 63.4. That's your next target. But always play with stops. Pat wants to know about hack. What the heck? Yeah, no, I'm just kidding. This is cybersecurity ETF. Yeah, beautiful chart. Absolutely beautiful. But what is a stock like this going to do in any kind of bear phase if we do get one? It's hard to say because it really just recently broke through triple top and made a new all-time high. Is it a head fake? It is not a head fake until it is a head fake, which means simply it's a breakout technically. Got to put a stop under 67, period. Don't let it get underneath here. And also, this is off this low, a 1, 2, 3, 4, 5 wave move. And maybe it is. Could be a 1, 2, 3, 4, and maybe it goes higher. If it does go higher, and the market permits it to, 76.7, and again, is your target, 76.7, and your stop for me is under 67, because the vulnerability is 61, 2, and maybe 58. There's a double, triple bottom here. And that's an area where I'd be, look, stock could easily come down in that zone, or at least test the trend line for starters. It's vulnerable. But again, if the market goes further, look for that, say 76.7 range, and exit a bunch of it, if not all of it there. Bill, I like TGTX. What's not to like? The volatile, sure. But right now, here's the trend. The trend is your friend. The trend is up. Easy stop. See the double bottom there? If it breaks that, it breaks the trend line and moving averages and everything else. But it's a little far from where we are. That's 21. It's 25 right now. Take the trend line, look at the moving average, and say to yourself, okay, under 22.50, I'm out of a third to a half. Under 21, I'm out of the rest. You cannot let this go below moving averages, trend lines, and lateral price support. It's also been in a nice rally from 13, doubling to 27. Should it continue, and the market permits it to, my extension targets are 29 and 33. There's no reason why I can't get there, but I'd be awfully careful about letting it roll over without a stop. Folks, you can't trade in Wall Street without a stop. Otherwise, you're asking for financial ruin. All it takes is one disaster to wipe you out. The key is to be able to live to trade another day, so to speak, and have enough cash to do it. All right. Lunar. Yeah, this is a good one, and I like it, but let's take a look at the current pattern. This is a tech trader swing. It broke out, formed the coil, and popped and pulled back. I believe I put a swing on it when it pulled back right in here, right about 5. It broke out here and spiked to my target, and we got out a lot of it at 9, hit 9.5, pulled back. It's got a bull coil. You can see 1, 2, 3, 4. There's a bunch of high intraday highs at 8 and 3/4. We've got to take 8 3/4 out. and then then your targets are 10, 12, and 14. And this is a 1, 2, 3, 4 as well. So if we get an Elliott wave breakout of this, what looks like a big wedge. Right there, see it? This pops out wedge. It could go vertical, and it probably will. Intuitive Machines. I think they made the lunar lander or something like that. Anyway, if the market cooperates, I'm looking for 13. Test the old high here on 13.25. So that's a nice pop from 8 to 13, but that's my take. Where would I stop it? I don't want it under the moving average. I don't want it under lateral price support either. So let's just say, got to stop under 670, under 670. You might want to consider a tight stop on half your position. Folks, you know, one mistake people make, they either make a decision to sell it all or buy it all. You don't have to do that. No rule says you got to buy everything when you make your decision or sell it. What's wrong with selling half when it breaks certain support and the other half when it breaks the key support? Right now, would you want this stock after a couple of weeks of doing that to break down? No, you wouldn't, would you? So I would say stop under 770. That's pretty tight. 30-year position, a half. And if it dips into the area and bounces, you still have 2/3 of your position. You can always add it back. But for me, I'm stopping the rest probably around under 7. So let's just say under 8, under 770, under 7, my stops. Now what we're looking for is a pop over 8 3/4. Then you're looking at 10, 12, 14, 13, something like that. Anybody else with a quick question for me? Well, it looks like that might be it. So we have come to the end of our little description and webinar. Folks, again, please join me at the Tech Trader, thetechtrader.com. Sign up for a free 20-day trial for anybody who's here today with me. And just make sure you put somewhere down the word or phrase, analyze my trade. And be able to give you a 20-day free trial. Come into the webinars that I do, live webinars every day. I show people the charts. I show them where support, resistance, and targets are. Every trade I give you has support, resistance, and targets, and stops, most importantly. So there are a couple more messages, so we'll just continue. Barry says, I love listening to you. Thank you, Barry. I love listening to myself. I'm just kidding. There you go. Folks, again, thetechtrader.com. Sign up. Come in for free. Doesn't cost you a thing. I'll have a lot of people telling me that they make enough money in the trial period to pay for a year's subscription easily. It's a very active place with a lot of ideas, and I think you'll be quite surprised at what you see. Look forward to having some of you there, and thanks again for inviting me, David. I will talk to you guys soon.